Good evening, everyone. Welcome to the channel. Today I am going to talk about WH Group interim report. Do note that this is not a financial advice or a buy or sell call. All content are AI generated and is not associated with anyone. WH Group Limited offers a diverse range of businesses and services across various segments. The company's key offerings include packaged meats, production and sale of low-temperature and high-temperature meat products, pork, hog farming, slaughtering and wholesale and retail sale of fresh and frozen pork, poultry, slaughtering, production and sale of poultry ancillary services, plus logistics and supply chain management, plus flavoring ingredients and natural casings, plus condiments, plus biological pharmaceutical materials, plus packaging materials, retail operations, finance and property development companies, retail food stores, and livestock breeding. The significant increase in WH Group stock price. A year of positive developments over the past year, WH Group's stock price has experienced a remarkable surge of 56.65% in one day and a 44.22% increase over the last 12 months. Several key news and financial announcements have likely contributed to this significant rise. The company's exceptional full-year 2024 financial results, which included a 142.7% surge in profit attributable to owners of the company, were a major catalyst for investor confidence. WH Group also proposed increased shareholder returns, including a final dividend and special cash dividend, demonstrating its commitment to shareholder value. In addition, the company's positive half-year 2025 performance, with revenue and operating profit increases, further boosted investor sentiment. Analyst upgrades and a stable second-half outlook from DBS also contributed to the stock price increase. Strategic acquisitions, such as Morlany Foods' acquisition of Pupil Foods, signaled potential diversification and growth opportunities for WH Group. The company's, the Smithfield secondary offering, and associated special dividend announcements in early September 2025 added to the positive momentum. These combined developments have likely contributed to the significant increase in WH Group's stock price over the past year, making it an attractive investment opportunity for investors seeking strong returns. The primary drivers of revenue growth or decline can be identified through various key performance indicators extracted from the financial summary. The most significant contributors to revenue growth include sales volume and average selling price increases, particularly in packaged meats, plus 2.3%, and pork, plus 14.1%, hog production and import volumes, which saw a 0.6% increase and 3.4% increase respectively. Geographical variations, with notable growth in China for both packaged meats, plus 15.6%, and pork, plus 6.8%, as well as significant increases in Europe for the others segment, plus 53.8%. Conversely, revenue decline was observed in North America for both packaged meats, minus 2.4%, and pork, minus 37.5%. The acquisition of Argyle contributed $85 million to revenue for 6 months ended June 2024, but its impact on overall revenue growth is not specified. Overall, the primary drivers of revenue growth or decline are largely influenced by sales volume, average selling prices, hog production, import volumes, and geographical variations. Net income and profit margins experienced fluctuations across different regions. In the U.S., net income increased due to higher hog prices and lower costs, but profit margins were less favorable for processors due to high prices and tariff negotiations. Conversely, in the EU, net income decreased due to downward price movement, while profit margins improved due to increased export competitiveness. However, profit margins declined by 9.9% in Europe. In other regions, such as China and North America, profit margins remained stable or improved due to various factors like a turnaround of hog-raising operations. The company's financial performance suggests a positive trend in its operating cash flow. The data shows an increase in net cash flows from operating activities, rising from $689 million in 2024 to $767 million in 2025. This upward movement indicates that the company is generating sufficient cash from its core operations to meet its financial obligations. The company's financial situation has undergone significant changes. Notably, the debt level has increased substantially over the past year, rising by $565 million to reach a total of $3,875 million as at June 30, 2025. This represents a considerable increase from the previous year's total debt of US $3,310 million. In contrast, interest expenses have decreased slightly, dropping from $70 million in 2024 to $69 million in 2025. Despite this minor decrease, the company's increased debt level is a cause for concern and warrants further examination. The company's financial performance varied across different regions and segments in the recent period. Notably, North America was a standout performer, with reportable segment profits of $675 million and $544 million on two separate pages. Europe also showed some resilience, albeit with mixed results, reporting profits of $149 million on both pages, but also a significant loss of -$92 million. On the other hand, certain segments and regions struggled to keep pace. China's packaged meat segment incurred a substantial loss of -$28 million, while Europe's others category reported a loss of -$4 million. Furthermore, Europe's overall performance was marred by a notable loss of -$92 million on one of the pages. Overall, these results highlight the company's regional and segmental disparities in financial performance. Management is outlining a strategic plan to drive the company's growth and stability. Key initiatives include focusing on partnerships for a more sustainable pork business in the U.S., expanding value-added packaged meats business for continued growth, enhancing management efficiency through internal restructuring, strengthening regional synergies, expanding presence in Europe through strategic acquisitions. These efforts aim to position the company for long-term success and growth. There were no notable acquisitions or divestitures in this period. The company's financial strategy focused on organic growth and internal development rather than external transactions. The company has a history of paying dividends to its shareholders. In the past, it declared a final dividend of $0.40 per share for the year ended December 31, 2024, and an interim dividend of $0.20 per share for the 6 months ended June 30, 2025. This demonstrates the company's commitment to returning value to its shareholders through regular dividend payments. Concerns surrounding inventory buildup and supply chain disruption. A recent financial summary highlights growing concerns about inventory buildup within the company. The total inventory value has increased by $77 million to $2,882 million, indicating a significant accumulation of raw materials, work in progress, and finished goods. The substantial increase in raw materials, $199 million, suggests that suppliers may be overstocking or that production is being ramped up without adequate demand. Meanwhile, the rise in work in progress, $60 million, could indicate inefficiencies in production processes or a mismatch between supply and demand. Furthermore, the significant jump in finished goods inventory, $216 million, raises concerns about potential stockpiling or an inability to meet customer demand. These developments may signal underlying issues with the company's supply chain management, potentially leading to disruptions if not addressed promptly. That concludes the financial summary for WH Group. Feel free to comment below, and I will be happy to answer them when possible.